So we're looking at financial functions. So to begin with, let's look at the present value function, which is the PV function. Hope I'm audible.
Yes, I can hear you.
Okay, so we did this the other time. This is just a review, revision, sort of. All right, so now if you, to illustrate this, you see the present value function, with the present value function, you can compute the amount that needs to be, for example, you can compute the amount that needs to be invested in the present in order to get a predefined amount in the future. For example, let's say you want to deposit a certain amount in fixed deposit account at the rate of 8%, let's say for a number of years, okay, let's say 18 years, okay, so that at the end of the period you have 100,000. Now you want to deposit 25,000 and whatever. You don't know this amount yet. You just want to know how much you have to deposit, such that if you deposit such an amount at interest rate of 8% for 18 years, you want to have 1,000 naira. Your goal is to have 100,000 naira in your account. That's the future value. Okay, you want to have that over a period of 18 years at interest rate of 8%. So what is the amount you have to deposit in order to realize that future value? So this is an example of a situation where you use the PV or present value function.
Okay.
Okay. So if you want to know the amount that should be invested in order to get some predefined future amounts over a specified period of time at a specified rate of interest. Okay, so that's when you use the PV value. So do that, just simply say equals PV. Of course, you open your bracket, then just follow the hint here. First of all, it's asking for rates. So you click on the rate, comma. Next is asking for the period. Number of periods is 18.
Yes.
In this case, number of years, that's 18. Comma. Then what's the payments?
Amount.
The payments you want to be making. Okay, the payments that you want to be what's the payments that you want to be taking during the period? In this case, we want our payment to be 0. Nothing will be withdrawn or deposited during the period. Then the future value is 100,000. That's FV. Enter. Okay. So it gives you 25%. Okay, but I want you to see something here. Let's make a slight modification. Now, where I put 100,000, suppose I have put 5,000 there. Sorry, where I put 0. Suppose I have put 5,000 there. I want to see what would have happened. you see that the value will so it depends on whether you make it positive or negative. Now, if I put 5,000, what that 5,000 means is that in addition, you see, what that 5,000 means is that what that 5,000 means is you want to deposit, you want this to be your future value, right? Okay. And every year you want to be withdrawing this amount.
Okay.
Are you following? Since you want to
Yeah.
be withdrawing something every year, so you see the initial amount you are depositing is higher than this one, because in this case, you are putting zero in your payments, which means you will not be paid anything the first year, the second year, the third
Okay.
year, not until at the end of the period.
18 years. Yeah.
But in this case, you'll be paid 5,000 at the end of each year. So are you following?
Yeah.
So by the end of the fifth year, here you are still going to have 100,000, right? But here you
Yeah.
just deposit 25,000. You don't take anything from it. You don't, it will amount to this one. But
Okay.
this one, you deposit this amount at the end of each year, you withdraw something. Okay.
Yeah.
So here
So I have to pay
you have
more.
to deposit more. Yes, exactly. You understood?
Yes, sir.
So that's how the PV function works. So let's look at the FV function. FV stands for future value. Okay, so in this case, watch here. Here, the future value was defined, predefined. We had to compute the present value. But in this scenario, we know the present value. Okay, we know the number of periods. We know the rates. We want to know if this value is invested at present and at the rate of 8% over a period of 18 years, what will be the value of the investment
In the future.
in the future? That's after 18 years. This is actually future value, not present value. That's what this is talking about.
Yeah.
That's what it's talking about. So now, notice that here, you are depositing this to get this.
Mm.
You are depositing this to get this. So here, you are depositing this. This is known for 18 years, 8%. So what is the future value? What will it amount to? So how do we get that? So we have to supply the rate, number of periods, payments, present value. Okay, so now, so let's see. So just say equals FV. It's asking for the rates. Click on the rates. Mhm. What next? What's it asking for me?
Period.
Number of
Number
period.
of period.
That's
Yeah.
18, comma.
Yeah.
What next?
Payment amount.
Payment
0.
amount 0. You already know why it's 0.
Yeah. The present value 100,000.
Present value is 100,000. Yes. Okay. So,
Yeah.
so if you deposit this amount, you get this amount.
Mm. Yeah.
Okay. If you, for example, if I put minus here now, mhm, so something you should know here is this. If this is minus, this will be plus. If this is plus, this will be minus, right? This is the present value.
Mm.
Okay, so let's say, why? Because, this is, you are giving this to the bank and getting this back. Do you understand?
Yeah.
It's debit, credit. You are giving this to the bank. You are getting this back. Yeah. So we can color
But
code.
when we calculated it with plus.
Yes. Yes. Whether you do plus or minus, you see, you are getting the same answer, but you have to
Yeah.
understand the direction of what you are dealing with. Okay? Because this one now is what you are giving to the bank.
Uh,
You are,
you're beating
um,
yourself.
yes, this is, um, sorry, this amount is a debit. It's a debit. This amount, right? This amount is given to you. Okay? But
Mm.
you are paying back this one.
Okay.
This here, see, remember how I illustrated this one. Okay? I said here, you are doing a
Mm.
fixed deposit
Mm.
to get something back. Okay? You are
Mm.
depositing something to get something back. It's a fixed deposit. So they can debit your account.
Mm.
Okay? You are giving the bank an amount. On your side, is there are two ways you can look at this thing, from the bank side or from your own side, their customer side. Okay. What this if fixed deposit, you deposit an amount to get something back. But here, what are you doing here? Here you are taking a loan to pay back. I don't know if you are getting my point. You are taking a loan here. Let's say the bank is giving you a loan of
100,000.
100,000. They are giving it to you. Okay. So you are paying back this
After 18 years.
after 18 years. Yes. Do you understand?
Yeah.
So you give an amount to get something back after 18 years. So you have already done it. So just do your future value. You just follow the hint here. Specify the rate, number of periods, payment amounts, and all that. Okay. So that's the PV function.
That's if FV function.
What?
Is the FV function.
Sorry, the FV function, sorry. So just know that it's always opposite. So the rates, you may also want to calculate rates. You may want to calculate the rates. For example, you have you know the present value, you know the number of periods, you know the future value, and you're asked to compute the rates. Okay. So how do we accomplish that? The future value is known. The present value is known. Okay.
Period is known.
So it's like somebody takes a loan of 100,000 for 18 years at 9%. What is the future value? In other words, how much will the person pay after 18 years? That's what this is. That's what this is talking about. Okay, so now let's say we have an idea of we have an idea of all the other things, but it's the rate we are looking for. Okay, so that's what we are talking about now. The rate we are looking for. So how do we accomplish that? Because
the rate.
Use the rate function. It's asking for what? Number of periods.
Number of period is 18.
18.
Payment amount.
Payment amounts.
It does if 0.
Okay, let's say 0. Let's assume that there's no
a yearly payment.
Yearly payment, periodical payment. Then what is it asking for again? PV.
Present value.
Present value is
100,000.
Present, is it present value? Yes, sorry. Present value is 100,000. Comma. What's the future value?
The future value is down there. It's about future value.
Okay.
Yeah, 500,000.
Yes. Okay. So, but you need to know that if let's paint another scenario.
Okay.
Now, suppose Suppose we say um, suppose we say instead of this zero, we say 15 plus 15,000, and then so, N per payments.